Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, and it's January 25th. There's just one economic news release scheduled for today, and that's the new home prices, or home sales, excuse me, for the month of December. So we had a revision actually on October. It was revised up higher, much higher, up to 398,000. So a good number for the month of November. But we had a forecast of about 385. And we came at 369, so we came short of the forecast, but still very good numbers for that month. Now, if you watch the news, they're going to say how disappointing it was because it didn't meet forecast. But you factor that one, it's the holiday season that we're having that many, and those are actually not bad numbers for what we've seen comparisons like last year. We're up quite a bit from last year, so these are actually not as bad numbers as what the media will probably point out to, even though it didn't meet the expectation or the forecast. But you also get, again, got to factor in that they increased the month of November as well. So let's go ahead and take a look at the headline news here. And this is what's driving the markets. We got the stock markets up, and a lot of it has to do with the earnings reports that are coming in. So this is what's driving the market from Procter & Gamble. They're either coming in a little overall, especially the multinationals, are coming in a little bit at even what they're expecting, or even a little bit higher. There's a few disappointments as you've seen in the last couple of days with Apple, but overall, most of the companies are doing a little bit better, at least expectations, or maybe even a little bit better. Also, another thing with the news is that they're really excited about is their banks are actually repaying the loans early. They're larger repaying it, so they're saying putting that as documented basically as a sign that things are getting better in Europe. So technically, they're in a recession still, but they feel that by the banks coming back and repaying some of those loans, that it's a good sign that things are getting better in Europe. So investors are liking that. So right now on the stock market, it's been on a torrid pace. The S&P's up over 1,500, and it's the best, the highest they've been since 2007. So things have been going well. So let's go ahead and take a look at, another item I forgot to mention was today is the Treasury Secretary Geithner's last day as Treasury Secretary. So a lot of people may be rejoicing for that. As a friend of mine, Barry Habib, had mentioned, there's rumors that he may have his eye actually on the Fed president, is Bernanke's seat. So this is Bernanke's last year. And me personally, I would think that would be unfortunate if that was the case. He did terrible job as a New York Fed. He did a terrible job as a Treasury. He's very smug and, very arrogant. So I'd hope to not see him in that office. So that's just my personal point of view. I welcome you guys to make your comments down below, see what you guys think. But hopefully that won't be the case, and glad to see him out of office. So here's what we have. We had the bond chart here. We had so we had a big drop downwards. And then today we have a huge opening gap, even worsening. So if you look at yesterday's, from where we left off yesterday, we're at 66 basis points lower. So that means basically if you have a par rate, that rate, let's use the rate of 4%, didn't cost you anything, that now is going to cost you 0.66% more to have that same rate. Now, if you look at 2 days ago, we're talking almost 1 point more regards to what that rate would be if you look at 2 days ago. So back on Wednesday from where we were, that's 91 basis points. So 100 basis points equals 1 point. So a $100,000 loan would be, $910 from 2 days ago. Now that rate would cost you $910. Now we also had we're also in a area where we're actually having a new low here. So this here was a new low we had a couple weeks ago, and this was the day after we had the Fed notes release, and there was that big surprise. Remember this huge drop? We had that big surprise where a few members were really against the mortgage-backed security purchase program and wanted to see that finished off this year. So the market started feeling a little bit better and kind of eased off of it because it was more of an emotional pull away from pull. But now we got basically we're competing for the dollars with the stock market, and at some point the stock market is gonna not have this torrid pace as they're continuing. They're pretty hot right now. At some point, it's going to slow down. They're going to take a breather, and some of that money will be going back to the bond market. And I do see this improving a little bit, but to get back to these levels, I'm not sure if we'll get back to those levels. We do have a downward trend. We may have seen our best rates so far, but it's going to be hard to say. Right now, we haven't been below this level since September of last year. So this is kind of important. Hopefully, we could pull back and pull above this. At some point, again, we usually have these opening gaps, and many times they do close. As we saw, we have these gaps here. Remember how they closed up over here and here? And even like these. So we do usually have them close up. So we do have, so if we can hopefully pull up above this line, back up above this line by the end of the day, we may have a shot at some point, maybe having some time upward bounce to kind of close this gap up and have some improvement in the rates. So be cautious, but right now we're rates dramatically went upwards, worsened quite a bit, especially over the last 2 days if you look here. All right, folks, you guys have a wonderful day. Thanks for watching, and I will see you guys on Monday. If you guys like to have these on a daily basis, just stop by mikesdailymarketreport.com. There's a upper right-hand corner. You can subscribe, and we'll email these out to you on a daily basis. We do not share your information, nor do we email you anything but these videos. Have a wonderful day.